The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 9th, terrific Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. We do not make that one little 2x4 shift. It means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. And more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. Of course, internationally, 727-445-1044. Of course, you can send me an email, steve@tfnn.com, and inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we have basically a flat market out here. The Dow's up 7, S&P's up 3, NDX up 5, Composites up 7, Russell's up 70 cents. The semis are up $2. New York Stock Exchange up 14 points. The Wilshire is up 13 points. It's the trannies, the transports, that are down 18 buckaroonies. They're trading out at 92.53. Gold is back $6. Silver's down 24 cents out here. Lead the charge individual stock-wise to the upside. Dollar-wise, it's $11 with Equinix. That's trading at 374.50. A couple million shares behind that move. Regeneron Pharmaceuticals is up about 10.40 to be exact. Priceline is up $7. National Beverage Corp. Fizz. Oh, what a relief it is. That's up $6. Intuitive Surgical up 6. Signet Jewelers up 5. Madison Square Gardens, they're up $5. Hey, Tech Data Corp, an old stalwart from many, I do mean many years ago, and I believe they still are out of the Tampa, Clearwater area. TECD is a ticker symbol. They're up 5% or $4, $4.50. Tailored Brands, TLRD. I don't know much about them. Maybe I should, but they're down 32%, about $7.50 with about 13 million shares behind. I'm going to assume that this is a pretty good volume day for it, unfortunately, to the downside. Granger WW down $5. Can't tell. Really, it's Cantel Medical. That's off $4. Eagle Materials off $4. Simon Property Group down about $4 as well. So where do you want to begin? Where do you want to begin? Well, yesterday we talked about how the markets had gotten into an oversold condition. Of course, when I'm referring to markets, in this case here, the tool that you and I use is by taking a look, and this is going to answer a question that came in from a listener earlier. And this listener asked if I could go over the New York Stock Exchange somewhat in detail and provide a bullish case and a bearish case. And so, voila, we'll do that. So on the bullish side for the New York Stock Exchange, this is what I would share with you. And let me see if this is where it is that I would share. Yeah, here's what I would share with you. Let me do this first. Let me do this and turn off a couple of things out here. Let me see if this will actually work if I turn it off right there. Does that do it? Does that do the job for me? Okay, perfect. So now what we're looking at out here, the bottom panel of my chart for the New York Stock Exchange is the advanced decline line. Don't worry so much about the number that's computed here. It all depends upon when you actually start computing that number. And this is nothing more than taking each day's net advanced decline information and adding to the prior days, and you run into sum total. This is the sum total of it. Now, here's what we know about the New York Stock Exchange. My crosshair is focused on March the 1st. March the 1st, the New York Stock Exchange hit a brand new all-time high. That high was 11,687.06. If you take a look at the blue line, just look at the box on my screen that says A-D for advanced decline, you'll see a reading of 394,474. That, too, is a new all-time high. Now, the way that the New York Stock Exchange makes tops, and you can go back and take a look at every significant top that has ever formed inside the New York Stock Exchange, you have price making a higher high, and you have the advanced decline line not confirming it, meaning making a lower high. Do we have that on March the 1st? The answer is absolutely, positively, unequivocally not. So what does that mean? Well, if this were to be a significant high, we'll see a higher high, and we'll see the advanced decline line not confirmed. When that happens, it typically takes several months, 8 weeks or so on average. I don't have it narrowed down to the exact number of days because it's never consistent. But it doesn't happen like a week later or 2 weeks later or some other number of weeks later. So that is on the very longer term bullish side for the New York Stock Exchange. Is this time any different? I don't think so. Of course, I don't know for sure, but I can tell you that let's go with the patterns, because that's the only thing you and I can do is evaluate the patterns. We can't control the patterns, but we can evaluate them to understand what the market is going to do. Likewise, on the bullish side, the move to the downside over the course of the past 5, 6, 7 days out here inside the New York Stock Exchange has taken the actual advanced decline oscillator reading. What's the difference? Here we're taking the difference between the 39 and 19-day exponential moving averages and of that data and plotting them on our screen out here. You can see the reading right now is minus 247. As soon as you get to minus 150, you start to look for a bounce/bottom situation. We're basically still trading right into the rising trend line here. So very likely we have seen the low for the next several days. I don't care if it's Jobs Friday out here, and I can't control it, but what the tools are communicating to you and I is that the move lower is over. This has to be worked off. How much of a bounce will we get out there? Well, typically what you would do is you would see price go up and test. What's a way for me to easily show you this? Let me do this here. Let me switch over to I didn't even populate those. Now, that's a bummer. I'm going to have to remember to do that after the show. Well, here's another way that I can do it. So let's do this. We'll pull open this chart. Let me pull up the New York Stock Exchange. And what you're going to do is you're going to look for Stevie's red line out here. And my red line is priced at 11,584. So that should be resistance if, in fact, this is a downtrend that has begun, which I believe that it is. So this is only likely the first leg. Now, not very much of an A to B equals CD on any kind of bounce up to 11,584, but 11,584, and that figure is going to change from day to day, is where I am first targeting the New York Stock Exchange. So what's the bearish side? Well, slightly bearish would be the mere fact that you got an A to B equals CD. The other bearish side would be, drum roll please, Johnny, the Hindenburg omen. Let's go take a look at that when we get back from this break.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we left you hanging there, hanging by a thread with regard to the Hindenburg omen. So it was apropos that this listener had requested to take a look at the New York Stock Exchange to look for the bullish and the bearish case out here so we can see where really the fight is going on. We have the New York Stock Exchange on my screen, a little different chart here. And there was a Hindenburg omen signal that occurred 2 trading sessions ago. Now, you and I were taking a look at the new 52-week lows that were out here as this March high was being formed. That was not the day that the Hindenburg omen actually occurred out here. But what we noticed was that, hey, while the market is hitting new highs, why are new lows? Why did they have a rising trend line out there? Now, in order for a Hindenburg omen signal to form, I'll get it out, but you try saying that even one time slowly out here. You need both new highs and new lows to be greater than 45. So if we go ahead and we move my my crosshairs over across the date of March 7th, and you're looking at my data box, you're going to see the bottom panel that says yearly new lows at 65. And you'll see just above that, new highs, 55. Okay, we can check that off. Check that off, or check it off, whichever it is that you prefer. The next thing that you need is you need to take a look at the New York Stock Exchange. Is it trading above where the NYSE was trading 50 days prior? Well, 50 days prior to that is going to take it to the day of December 21st. Now, where that close was at was 11,142. The high was 11,174. The answer is yes, we can check that off as well. Now, it doesn't actually get triggered. Here's the key, and this is kind of interesting because the trigger actually occurred on the exact same day. You know, like you were going to ignite the old Zippo lighter and boom, there it was going to explode because it needs to have the advanced decline oscillator reading below 0. Well, we were at minus 178 as Stevie was beating his chest like Paul Revere, although I don't know if Paul Revere was really beating his chest, but saying, hey, oversold, oversold, oversold. That's really where we're at out here. So you have all of the Hindenburg omen signals. I don't think I've read anything actually about it. Usually when it occurs, you see all kinds of, and I'll get emails on it to say, hey, what about it? Because the omen, now this was created by a guy named Norman Fosbach. And it has worked in the past, but it has worked the number of signals that are out there, and I don't have the exact number. I think David White once did a study on this or interviewed some other guys that had done some work on this. There are more false signals than there are real signals. So, hey, it's out there. I throw it out there. It's got 30 days in order to work. It's supposed to give you a premonition of a market crash. So, I mean, can I ignore it? The signal that works really well is when you make a new all-time high in price and you make a new all-time high in that advanced decline line. And by the way, on the volume side, its all-time new high happened just 3 or 4 days prior to that out here. There's too many bullish signals to say that this Hindenburg omen is actually going to prevail. But hey, how do I know? Can I foretell the future? No. So there is your bullish case and your bearish case for the New York Stock Exchange. Now back to the markets out here. So what else is it that we can look at, shorter term? Hey, what's going on? Hey, Steve-O, what are you paying attention to? Well, I like to take a look at what's going on with regard to our market profile. So if we take a look at the daily TAS market profiles out here, you can see I've gone ahead and rolled it over to the June contract out here. And as we take a look at it, so some of these numbers may change a bit. And if we take a look at what I'm watching inside the ES Mini, it's going to be watching the price level of 23.66 and a quarter. If, in fact, price gets above that, closes above that, what that says to me is that the ES Mini is likely going to go test its highs out here of 23.97. So you're talking 66 to 97. Watch that level. So far, it's just been a test and a rejection of that area today. Watch it. It looks to me that what is going on is the NASDAQ is signaling to us that the ES Mini is going to be able to be dragged up above that level and then go test its highs. Why? Because when we take a look at its daily box out here, ever since that March high, we've traded above it all except for one day and just for a few moments. That being the March 7th time frame. We're still above it. What is that number? Excellent question. We're looking at 53.60.50. Now, we take a look at the Dow out here. This profile here is formed differently than the March contract. The March contract, when it formed its new box out here, the profile was below price, which is a very bullish message. Either way, it doesn't really matter at this stage of the game. Why? Because price is still trading above its daily box. The top is 27.71. The low today, 27.78. As long as price stays above those levels, this says to me, okay, the move to the downside, it's over. Hardly any kind of real price destruction inside of these equity futures contracts. And if we take a look at the message coming from the Russell 2000, right, this is probably the more important message out here, is that what happened during this decline is price found support at the bottom of its daily box, 1360.101. If you were looking to go long the Russell 2000 for whatever your reasons are, this morning was the time to do it. Do you have some type of bullish reversal signal? No. What do you need next? What you need next to confirm that that was the right move, if you took that move, you want to see a close above 1367.80. Why? Because that happens to be the weekly profile box. And in the weekly profile box, which has formed above the prior weekly profile box, this is a bullish configuration. However, until you get back above that level, 1367.80, right now it's neutral. It's really a neutral type signal. So watch the real information, I think, does not come from the Dow, does not come from the NQ. It's going to come from the Russell 2000 or the ES Mini. So watch those levels out there. If they get above those areas, that says the bounce is underway. You're going to say, hey, how long does this bounce last? Is it going to quit on Jobs Friday? And I say, no. Not a chance. Of course, there's a chance, but I say not a chance. But there is a chance. I say no, Jobs Friday is not going to upset the Apple cart out here. And speaking of Apple, we probably ought to go take a look at Apple. I think that the market moves higher for several days out here, at least several days, in order to really – in fact, ideally, those of you that have the devilish, bearish outlook out here with regard to these markets, what you want to see – right? What you really want to see is you want to see this advanced decline oscillator reading. You want to see it get up to 0. And right now, you're at minus 251.56. You want to see it get up to 0 and then kabosh, slam to the downside. So it's got a lot of movement to go to the upside. Now, with regard to the market, there's not a lot of enthusiasm out here, but I'm working on that. I'm trying to give the market all the information that it needs in order to take the action that it should. So we get back from this break. I'll go check on email, see if there's any requests in there. Looks like we've got looks like we have a request out here with regard to Perigee, and so we'll take a look at that and anything else that you'd like. Steve Rhodes at TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So one of our Denners posted this question here. Says SR, question please. The S&P futures contract now trading persistently under the perigee pivot point. This has not happened for several months, though no price damage yet. What say you about this? Now, what this listener, Denner, is referring to is a red line that is on my chart. Now, we're taking a look this time right now. What we're looking at is the March contract. And specifically at 3:35 in the morning on March the 3rd, the lunar phase known as perigee arrived. You might say, what is that? That happens to be during the lunar cycle, during the 2-week, approximately 2-week lunar cycle, where the moon is positioned closest to Earth. If you ever seen one of those full moons where it's just like a big, huge full moon out there, and some of them seem to be much further away, well, those big, huge ones happen to be when they occur nearly simultaneously when the perigee lunar phase occurs, versus apogee, when you have a full moon. Apogee would be where it is furthest from Earth out here. Now, does that necessarily matter whether one is closer or farther away? No, because both of those points, for some reason, mark an important level to help us identify whether one should be long or short the ES mini. Now, what you always do with regard to trading, it's like a indicator, it's a trigger. You have to then use other things to get you in and out of the trade, to find a bottom, to find a top, so on and so forth. Some of those tools might be market profile. Some of those might be price moving higher or lower on less relative strength or energy, wave counts, any number of tools. We basically nailed down to 4 different tools to go ahead and use out here. And when you take a look at this red line, it's not a swing point. Very rarely, when the price comes in at that exact moment, does it mark a swing point. And this was really not a swing point at this stage here. And price immediately bounced off of that level. I like to use a 30-minute chart out here just to eliminate some of the noise. But I have it posted on my intraday charts out here. Boy, I'm not really doing a good job answering the question, but I have to give you this preamble. Otherwise, there's no post-amble, if, in fact, that's even a word out here. But you can see how price holds this level, or at least it did in the early part of March the 3rd. And then all of a sudden, we saw price, this line, act as resistance right about 6 o'clock in the evening on March the 5th. And every time up, trying to break above it, it failed. Let's look at the number of times and tests above that area, and it failed. Well, what area? 2374.75 to be exact. The last test that we had out here was just a couple of days ago, March the 7th, and the exact high was 2374.75. And the exact number for perigee was 2374.75. How does that work? Of course, the individual who posted that in the den knows exactly how that works, which means he doesn't know how it works any more than I do. We just know that it works, which is really important. So what is it that we make about it? The only thing you really can make is the ES Mini has given you somewhat of a bearish outlook unless you can find some type of bottoming signal inside the ES Mini. Can I find that bottoming signal, wave counts, or anything along those lines? I can't. So that is really what it means there. Now, the problem has been, or why hasn't the market busted loose to the downside, has been because I now market in each of the equity futures contracts. Here's the NQ. And the NQ, remember, we were talking about how it's trading above its TAS daily profile, a key level of resistance that now, at least thus far, has become support. And each time that the NQ tries to take out the lows, it happens to find support at where? At its perigee line out here. So not until all of these equity futures contracts are able to break below this area, and I don't recall, the next apogee lunar phase is probably around the 15, 16, 17, somewhere right in there. And so we're only at March the 9th. So we've got another week, let's say, before that phase comes in. So you really want to watch. And, I have provided you with this number before, all right, and just trying to give you an assessment of where the markets are at. And I've said, hey, if you come in and the NQ is trading below 53.4875, the slow turn is giving you the big turn signal out here. And if you take a look at this morning's low thus far, it got down just below 53.4875. It got down to 53.5850. You got to love it. And it's held. So not until this fails does it say everybody jump on board. But I would say to jump on board, then that defeats the whole purpose of the indicator inside the advanced decline oscillator reading inside the New York Stock Exchange, which is tooting its horn pretty well. So Mr. Z, I hope that really answers your question out here. The ES says, yeah, I want to crack, but it can't crack until the NQ decides to go along with it. And then I just switch up and take a look at what's going on with regard to daily signals out here, and voila, that's my reading, and I'm sticking to it, even with the Dow trading down 27 points as we speak right now. Okay. Danny in Atlanta wants to take a look at Hi-Ho Silver. Silver's down 26 cents. That's another 1.5 pennies out here. And if we take a look at its contract, this is a problem for silver. The biggest problem for silver today is the mere fact, not that it broke its little rising trend line, which you and I took a look at. It's not the fact that it moved lower yesterday, which it did and got down to 17.24 and 17.239. Let's round that up to 17.24. Happened to be what should have been a support level, the top of its weekly box. Therefore, there's the problem, Danny. The problem is that it's now inside its weekly fair auction out here. And that profile, fortunately or unfortunately, is really equally spread out here. So it looks to me like silver, at a minimum, is now targeting the 1668 level. Will it find support there? I don't know. That's going to be a price where weekly traders supposedly are most comfortable, buyers and sellers out here. So you're at 17 pennies, $17 right now, basically. 1668 is likely where it is headed to. Now, the problem here with regard to both gold and silver is the mere fact that the Japanese yen is not signaling that it's done moving to the upside. That's right, to the upside when we take a look at this, meaning that it is getting weaker on this chart out here. So it's targeting its its weekly center of the box, which happens to basically be in the center of the box. And I don't know if 115.17 is going to be the stopping point. We have traded, or it has traded really, inside this sideways consolidation really since about, January the 13th out here. It looks pretty much, doesn't look pretty much, it looks exactly like this, right? If we take a look at what the yen has been doing, if we just simply go ahead and take off the market profiles, we'll do that for you so you can see that box. It appears there's nothing to indicate, there's nothing for you and I to suggest that this consolidation pattern, right, much easier to see right now, is really going to stop. So it could be, so if gold or silver are going to find a bottom, it's really going to be because the yen just bumps its head into the top of the consolidation pattern. The consolidation pattern says, Viva la consolidation. Not really very good with regard to the French out there, but you know what I mean. And what do I mean? That means if we do continue to trade this consolidation, starts to back off from there, then you would start to see at least gold or silver bottom or just have a little counter trend rally. There may be some other problems in gold and silver. I'm not sure. Maybe we should go take a look at what its price oscillator is doing out here. Nonetheless, there's going to be pain in the metals until this euro decides it wants to get long and strong. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So Robert writes in and asks if I would go take a look at light sweet crude. So the answer is, of course, we will. It's trading out right now. Let's see. Light sweet crude is trading out at $48.91, down $1.37. That's off 2 7/10% out here. So here's the level to be watching inside of light sweet crude. It's already tested it. Did it earlier this morning when it got down to the price point of $48.67. And just out of, just how does this work? That's the actual low so far today. The bottom of the TAS Daily Profile is 48.67. To my knowledge, light sweet crude isn't really getting the memo with regard to where these profiles are. This is how important they are and how well they do work. And when they don't work, just how important they are. So, Robert, if 48.67 doesn't hold, and I can't tell you whether it will or it won't. It should be good support. It should be strong support. But if we do see a close below 48.67, then, and there was a nice wide-ranging bar, that's your real breakout area. It's really the bar behind it that has a little bit lower swing point. That is November 29th. That really becomes the level of support or where price broke out from, which is 47.34. That will become your target. You got to close below 48.67. That could be one of the targets. There's no reason that the other target can't be the actual swing point low from November 14th. So this 48.67 is a really important level for light sweet crude to hold. I don't know whether it's going to hold or not. Here's what we also know today. It's trading lower. You've got a weaker U.S. dollar. Typically, those two things trade in sync with each other. And clearly they're not. The U.S. dollar index is back 200 ticks, straight out at 101.87, give or take, because I have a 10-minute delay on it. So, is it going to hold? I don't know, but watch those levels. That is the key. Is there anything on a short-term time frame? I doubt there is, but I'll go check on this other chart out here. Just give me a moment to post this, to pull it up. And we will take, let's just going to pull up the continuous contract. Oh, well, I take that back. Robert, I take that back. Hearken. If we take a look at on a 30-minute basis, in fact, on a 30-minute basis, when we take a look at what light sweet crude was doing as it was hitting that market profile, it was also moving lower with less relative energy. There's where you see the black diagonal line going from one candle to another. And the first time that occurred was at about 5:30 this morning. Then the next time was at 6. But at 6:30, there was a cavalry that came in, forming a bullish reversal signal, the piercing candle. And that was suggesting that, that low could or should hold out here. So you've got some markers that show that bulls are trying to defend that area. All the more reason to say if it fails, they just let go and price heads down to the next level, which is likely the swing point out there. So your email didn't indicate which side of the trade, if either side of the trade that you were on out there, but that's what I would be watching. Again, 48.67. Okay, I don't see any other questions inside the Tiger's Den. It is Terrific Thursday. There's nothing like starting the weekend or your Thursday evening a bit early. So should we do that? Yeah, how much fun would that be? Why don't we do this? Why don't y'all come down here? Y'all. Now I sound like a Southerner, I think. Now I don't know how Southern that actually sounded because that was really more like a Detroit y'all. But nonetheless, and I've spent more of my time down here than I did up there. But we should do this from the beach. Don't you think? Hey, this would be much more fun to actually do this from the beach. Tucker, my favorite automobile, posted in the den, did you cover the VIX index? And the answer is I did not. What was the other problem for gold? Good point. Yeah, see, at least somebody's out there listening. I don't listen myself. I'm not sure how you guys do it, and many of you probably say we don't know how we do it either. Let me just see here. I don't think the price oscillator for gold is down below zero, but it is worth a check out here. So let me do that, and then Tucker will come right back to your question with regard to the VIX. Just to get the data, I'm going to put the continuous contract up on my screen. Yeah, so we're okay really here. Let me just. The problem is here's the. That's not really a problem. The problem was more so. It's more so in the minors out here, Danny. Here, let's just do this. Let's put this up out here. Let me do this. So you see here, we've got the price trading below Stevie's red line. The price. So it says still retracement that is in play out here, and so it's not gold. It's not silver. It's really the XAU, the GDX. We'll just use the GDX at the moment out here. On its move lower. 2133, right? So no bullish signal here yet, and its price oscillator continues to fall and it's below zero. So the GDX will not give you any type of bullish signal until price is able to turn that price oscillator up. Now that's going to be a little bit of a lagging indicator out here, but when price is falling below zero as it is right now, that's a problem. And the real problem is we don't know how this is going to resolve itself. What the heck do I mean resolve itself? Well, if we take a look at where that cross occurred out here, a bullish scenario for gold would have been for price to have been backing up into that area and then actually taken it out, meaning gotten above Stevie's red line. It has not done that. It's continued to fall. It's not good news. Now, normally it's not good news, right? You don't know whether it's right or wrong. The reason why I say right is because gold, the mining equities, surely seem to be more influenced by what the yen is doing. I think by what the yen is doing more so than anything else out here. So there's another powerful influence that might say, this indicator tool is going to work better on some things than it is on others. And this may be the case with regard to the GDX. One thing that is unequivocal is that when the price oscillator is rising, then you've got a better chance for this to, in fact, go ahead and continue to move higher. So you got to watch 2264. So there is no other real significant. Now, the problem for gold, it's pretty simple. It is called the yen. So you might want to, give Oda Nobunaga a call and ask him, hey, can you get your act in gear out there? Okay, so Tucker was asking, have I covered the volatility index? And I have not. So let's go ahead and do that. Volatility index right now is trading above its 50-day exponential moving average. It's really going to be an end-of-day indicator out here. That line is 1188. So we know that the New York Stock Exchange its oscillator reading is in oversold territory. If the VIX closes today underneath its 50-day moving average 1188, it's just another signal that the bounce/bottom is going to be coming to a screen near you. Is that screen going to be on Friday? Maybe. Likely will be out there. What happens if it closes above the 50-day? It says, a little bit more of the old fear maybe is out there. You see prices pushing lower, and it really becomes a nice buying opportunity because of the way that these indicators are falling into place out here. With regard to the VIX, is there anything else really that's wrong? No, I'd probably have to go. I'll have to do this. I'll have to open this file because I don't think we've really gotten the so-called topping indicator in the volatility index. When we take a look at its spot price, cash indice, versus its futures contract, the difference between the two right now is 50%. You need 79%. We haven't gotten there during the August. No, not August. We'll be right back, folks. November contract.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you could potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Gerald Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Basically a flat market out here. The Dow's off 20, S&P is flat, NASDAQ down a couple, Composite off a couple, Russell down a couple, SOX is flat, New York Stock Exchange flat, Wilshire 5,000 down 0.1% off, about 28 points. So, yesterday we talked about, I had requests to spend a little time on the psychology of trading out here. And we didn't get a chance to do it yesterday because we just simply got carried away, or I got carried away. So, and I don't have anything really planned for this. The questions with regard to the psychology of trading are, what are the important aspects of it? Look, the psychology of trading, the psychology of anything. You can put anything in, replace the word of trading out here. It's all a mental game. If you take a look at my opening, when I say you find the gift in every set of circumstance out there, part of the key to life and dealing with circumstance. So you and I, we have good and bad circumstances that are just simply going to hit us, sometimes just totally out of the blue. It could be a trade that you're in, you have a loss, whatever it might be. Hey, how do you find the gift in every set of circumstance? Well, the only way that you can really do that is to reframe what just occurred out there. If you take a look at what typically holds people back, whether it's trading, whatever it is, it's fear. It's a fear of something. There's basically, you can categorize those fears in two areas. You can say it's the fear of loss or failure, right? The fear of not being enough, right? So some type of phrase like that. The other fear is the fear of loss of love, right? You're doing this for your loved ones as a team, what have you. If you're the one making the decision and the trade goes against you, or if you certainly don't use stops, things of that sort, So those are the two primary fears that drive you. Now, the question is, hey, what is it that really drives us? Yesterday, I mentioned that each of us are equal in one thing, in absolutely one thing, and that is our time. And that's why I do value your time so much, because I know you could, if you're here, you believe that you are getting some value out of it. So I'm going to give you an important set of value, the beginning aspect of what it is that drives you. And each of us, it's a little bit different formula. But it is a mix, just like a nice chocolate chip cookie batter out here, of these words out here. Each of us has basically, it's your 6 human needs. So your 6 human needs boil down to the following. Each of us have a need for certainty. Now, you say, how can you trade the stock market and actually have certainty? Because it's an uncertain market. The easiest way you do that is you plan out your trades ahead of time and you have a stop and an exit. That gives you certainty. You then limit what your loss or potential loss is going to be. That gives you certainty. So we each have a need for certainty. But can you imagine if all you had was a need for certainty, you'd be eating the same meal every day? You don't like that. So you also, God gave us that need for uncertainty. You should write those 2 words down on a pad of paper. The other 4 needs that each of us have are significance, the fear of love. It's called love and connection. So you've got significance, uncertainty, you've got certainty, and you've got love and connection. Really not one and the same, but we categorize those 2. One of the reasons why many of you are here is simply for growth, because you believe that somehow I'm able to communicate something to you and assist you with your trade and investing to help you grow out there. So we're all pretty much here for growth. And then the last one is contribution. Now, take a look at those 6 words out there. And if you have a priority that's different than my priority of those words, do you think we're going to have a completely different life? And the answer is yes. That's why you can take a brother and a sister from the same family, or 2 twins from the same family who totally turn out different. It's because they have juggled those words. I have a test. It's a very simple test. You could take it if you'd like. I could email it to you and send it back, and I can tell you what your order is out there, because it will then begin to assist you in what it is that you're trying to overcome in trading and investing. Trade investing, like everything else, it's 80% of the game out there. So you want to be able to understand what it is that drives you. Steve at TFNN.com if you'd like that test to understand your priority. Folks, stay tuned. Matt David White will be up next. Tom O'Brien from 3 to 5, and I believe Andy Heck to take it on home. Have a great Thursday. We'll see you on Fantastic Friday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.